doing the interest on drawings, it is the same procedure or same formula to be used as we used to find out interest on loan or interest on capital. But a few points are to be taken into consider while calculating the interest on drawings. First, when the date is not specified for withdrawal or drawings, then take time factor as 6 months. Now they are absurdly withdrawing the drawings on any of the day or date is not mentioned, then time factor 6 months is to be considered. When the rate of interest is given without the word per annum, then interest is charged for the full year. Now suppose rate of interest is given 5%, per annum word is not mentioned, then we have to consider that it is to be charged for the full year. So no time factor formula will be there. When there is irregular amount of drawings along with irregular intervals, then you have to apply formula interest on drawings. Either you can go with simple method of this formula and adding the different way, while or other way is product method. Now when we will be doing the sum, we will understand how the product method can be utilized. But when there is a regular amount of drawings along with regular interval, then interest on drawings is equal to total amount of drawings multiplied by rate of interest upon 100 multiplied by average period. Now what is this average period? So here I have given an average period table. So you have to you have to make it like understand or learn by heart that how the average period can be done. So some of the points are given over here that I will explain in the example. Now looking at this example, have a look on this. Ram had withdrawn 500 at beginning of every month up to 31st March 2019. Shyam has withdrawn 1000 at the end of every month up to 31st 3 2019. Interest on drawings is 10% to be charged. Find interest on drawings for the financial year 2018-19. Now in this particular case, Ram has withdrawn for how many? Withdrawn 500 rupees for every month, right? So 500 into 12, for 12 months he has withdrawn 500 into 12, that is how much rupees he has withdrawn? 6000. So first we will sort out with the Ram. So switching towards the formula, interest on drawings is the total amount of drawings multiplied by rate of interest multiplied by average period whole divided by 100 multiplied by 12. So Ram will be standing with where the total amount of drawings is how much rupees? 12 months into 500, that is 6000 rupees, and rate of interest is 10% as given in the sum, divided by 100 multiply by. Now what is the average period to be taken in this particular sum? So here Ram has withdrawn in beginning of every month. So beginning of every month he is withdrawing, and for full year he has withdrawn this. So beginning of every month and full year. So your answer will turn up as average period data. We have to calculate 13 by 12, 13 by 2 or 6.5. So 6.5 is quite difficult to calculate this because calculators are not allowed. So we have to simplify that. 2 6 are 12 plus 1, that is 13 upon 2. So coming towards this solution, Ram is equal to 6000 multiplied by 10 upon 100 multiplied by 13 upon 2 into 12. 12 is your time factor. So time factor divided by 12 you have to calculate. So your answer turns up 325. While in the case of Shyam has withdrawn rupees 1000 at end of every month. Shyam has withdrawn 1000 rupees at end of every month. So again we have to consider end of every month and for the full year. So it will give you average period of 11 upon 2. So switching towards this, 1000 into 12 multiplied by 10 upon 100 multiplied by 11 upon 2 multiplied by 12. 12 is again 12 average period. So your answer turns up as 550. So this way, calculation of interest on capital when regular amount at the regular period of time is given, you have to calculate this way. Now we are switching towards guarantee of profit by one or more of existing partners or all the remaining partners. When the new partner is admitted in the partnership, firms guarantee the profit to the partners which may be borne by one or more than one partner is specified for on profit sharing ratio. Now sometimes guarantee are given by the partner. Now Ram and Shyam are partners. Now they are having a like suppose one of the firm which is having a advocate firm, like suppose, right? Now advocate firm requires some of the professional tax consultant or something like that, so they get the partner Mahesh in the business. Now for this, Mahesh has said that I'm earning right now 20,000 rupees every month, so I should get a share of 20,000 every month. Then here maybe the remaining partners guarantee them that we will be managing anyhow, that you will earn 20,000 every year. So this is what that the statement says, that firm guarantee profit of partners which may be borne by one or more. Now suppose Ram says that okay, I will manage anyhow to get you 20,000. If the firm is not earning 20,000 profit, then it will be borne by the Ram itself. So this is the, when the sum will come, you will understand more easily. So this is guarantee of a partner. And then comes your last part, that is sometimes guarantee by partners to firm. Now sometimes partners also guarantee to the firm that if I am entering in the business, I will be able to make you earn this much amount of rupees. Then this will be also calculated in this statement. A partner may guarantee minimum fee or specified amount of that the firm shall earn by the effort. Shortfall, if any, will be borne by the partner guaranteeing the fee or some or amount specified. For example, Rohit, a partner, guarantees the firm that he shall bring only additional fee of rupees 1 lakh in a year, but is able to bring 90,000. Now रोहित ने क्या गारंटी दिया था कि मैं 1 लाख रुपए तुमको कमा के दे दूंगा, but what happened, he is able to bring only 90,000 as this. So here 10,000 shortfall will be brought by him to the remaining partners. So this way the calculation of minimum earnings guarantee of the partners can be done. And the last part of this chapter is past adjustment. Sometimes after closing of the partnership firm, financial statements of some of the errors or omission in the accounts of earlier year is to be adjusted. So in this, there are some of the adjustment can be done while single entry, or some of the adjustment can be done with the one or more adjustments. So this is the past adjustments pattern in which we will learn when the sums will be there. So that ends the theory part of the partnership firm.